Hi everybody, Alex Explorer here from Expert Forex, and today's video is another one in the series What Would You Do Right Now, in which I present a trading situation commonly encountered in everyday trading, and I ask the question from you, what would you do right now? And the idea of this is to stimulate discussion and also be of educational interest. Now, last week we asked exactly that question, what would you do now? And there you see the setups that we were discussing last week, and it generated quite a lot of interest, over 1,000 views, quite a few likes, and there was one little pupuliki that had a dislike there. So this was quite a good start to the series. It seems like it's something that traders like. Now, just to recap, I'm going to talk about the solution to last week's charts that I presented, and here's what we presented: a bit of a sideways movement on the daily charts, sort of a breakout, a quite strong breakout there on the 4-hour charts, a consolidation on the daily charts, and then on the hourly chart, sort of a movement downwards and a divergence and trend line violation buy signal there. So that was more or less the setup for last week, and we then looked at various targets. So we said, all right, if you're buying, where would you go if you were trading the daily charts? And there were some targets identified. And again, please go and watch this video. I have given the link before if you want the full discussion. And again, there were the targets if you were to buy this particular trade, or if you wanted to sell this particular trade. And there's quite a bit of discussion on why it would buy or why it would sell. And the same thing here for the hourly charts. So have a look at the video for more information. But in the end, what I asked is, what are you going to do now? Now, the choices are basic. You can do nothing. If you think it's too risky, you just say, no, I'll wait for a while to see better signals. Or you could buy right now using a market order, and then you need to basically say, where are you going to put your stop and where are you going to put your target? If you're going to sell, then where are you going to put your stop and where are you going to put your target? If you're going to straddle, in other words, put a buy and a sell above the current price, how many pips wide will your straddle be, and where would you put your stops and your targets? You could also use buy pending orders. So if you think it's going to buy, but it's not the right place right now, then you could put a buy pending order. Again, where would you put it? What would your targets be and your stops be? And the same for a sell pending order. You could use a sell pending order, and you could also use other strategies that I might not have thought of in this particular list. Over and above that is, how much of your account would you risk on the trade? Would you use trailing stops? Would you add to your position as it goes positive? Would you systematically cash in? So as the position's going positive, you cash portions of your trade in? Or would you use other trade management methods? So again, the feedback that I'm looking for are, you should mention all those factors that you take into account. And then, of course, we're going to discuss it in the next video. So this is what we're doing right now. And then what I ask in this video and what I asked in the previous video, please post what you would do in the comments of the YouTube video. So, and then I do also supply incredible resources for you to use, like there's the multiple moving average that you saw a chart of, where to place stops, channel trading courses, free forex trading tools, money management tools, simple and easy courses covering all the basic methods that you need to trade forex. Lifestyle technique, again, really good technique using the RSI and channels and all those kind of things. Automated indicators, and then trade identification channels and things like that. So all of that, a lot of resources that I supply you with. So if you're not sure about what to do, go and have a look at these resources. They can give you some ideas. Okay, here's the solution to last week's trade. And please, this is quite a busy chart, but I will go through it very systematically and tell you what's going on in this chart. Essentially, this line here shows the decision point. I'll basically ask, what would you do at this particular point? And at that particular point, the 1-hour chart was giving a nice buy signal. It had a divergence signal there, plus a trend line violation entry. So you could have entered right there as a buy. And obviously now you can see that the buy was the answer. So that would have been one of the reasons for you to buy. The other reason is that the price was bouncing on a very strong support level. And this support level actually goes back onto the daily charts and things like that. So it's a very strong support level, and you would also, that would be another reason for buying. Now another reason for buying is that the price is actually at a point in the channel where a buy should happen. So if you look at this, here's the channel, and look at this red channel going downwards. So you have a bounce up there, number one, bounce down here, number two, bounce down there, number three, and it was at the 4 bounce level. So it was on a channel trading basis ready to bounce up. So that's another reason that you could cite for wanting to buy this one. I'm going to show you, we all get so tied up with technical analysis and all. Now I'm going to just show you an intuitive method. So to use this intuitive method, all you do is you follow the highs and the lows, and you get a feel of what the rhythm of the market is. I call this, formally I call this the good vibrations method, but it's actually just an intuitive method. And I'm just going to start randomly over here, and I'm going to say, let's start dancing. And we say down, up, down, up, down, up, down. And you reach here, and what is the natural feeling that you get? Is it down? Or is it up? It's as simple as that. So that is the intuitive method that would have given you the feeling that the price wants to go up. And I won't say much more about it. It's a very difficult one to explain, but it's an intuitive method. Secondly, just have a look at where the price came from when it reached that point. There was a head and shoulder. See, shoulder, head, shoulder formation. Then it broke out through the neckline, strong breakout, and went right down. Now the normal thing that happens when there's that kind of breakout is that the price goes and retests the breakout point. So that's one of the reasons why you would also think of buying. The other reason why you would think of buying is that when you have a head and shoulders formation, the target for a head and shoulders is the height of the head. So if you look at from there to there is the height. Now if you look at the distance that the price has traveled, it's also the height of the head. So what we're saying is the price has got exhausted, and you can actually see how exhausted the price got and just stopped moving. And that's another indication of price exhaustion. So the likelihood of a bounce on the strong support level is even more confirmed. So if you add all the things together, the RSI divergence, the trend line violation, the channel bounce, the exhaustion point of the head and shoulders breakout, and all those kind of things, you add them all together, the buy starts making sense. Then the next question really is, where do we go if we buy? How far will this buy take us? So where do we put our targets? Now the first target is probably over here where my cursor is right now, over there, because there's a trend line that's coming down. There's also a support and resistance line that's going through there. So that's like a confluence of support and resistance, and a lot of people would get out there and they'd make 62 pips. So that's the first exit that you could think of. The second one is at the previous high. So there was a previous high just before the buy, and there you could go to that particular level. And that particular level is also a confluence of our channel. So 1, 2, 3, 4, 5, there's our channel, and so there's a confluence there of a channel and a horizontal support. So again, that could be a secondary target, and you would get 112 pips out of that. Then the next target could be the next major high, which was there. So it would be round about there, which is 151. So you could be targeting the 151 level over there. So that's another target that you can hit. Now, the other thing that I must show you, we haven't spoken about this, is, can you see here's 1, 2, 3, 4. That's a channel. The minute you've got 3 bouncing points, you have a channel. So once you've got these 2 bouncing points, you draw a parallel line, and then that becomes the 4th likely bouncing point for a channel. So at the point of entry, though, this 3 bounce was not confirmed. So strictly speaking, it cannot be used as an entry bounce. But the 4 certainly can, from the other channel can, but the 3 for this one can't. But as soon as it's bounced and it's moving in that direction, it can be regarded as a bounce. And therefore, if that is regarded as a bounce, then suddenly this target becomes a reality, and you could use that as another target area. So you could go for 220 pips if you used that kind of logic. The other thing that people like doing is they like using the magic moving average, which is basically just an average of 4 offset by 4. You'll see in the settings you can offset the moving average by 4. So that's all it is. And then what you do is, once you've entered the trade, your exit is when the price closes over the line, so over the moving average. So have a look here. It didn't close over the moving average there. It didn't close over the moving average there. And there was the first time it closed over the moving average. So that point again could have been an exit point if you were trading moving averages. And then there's a theory called Fibonacci trading. So if you look at this movement, it's a typical Fibonacci movement. You go, there's the leg, the first leg, there's the second leg, and there's the extension leg, and there is the 100% Fibonacci. Then the bounce was very close to 38.2. It didn't quite get there, but it was very close. And remember, 50 is not really a Fibonacci number, but 50 was the more realistic bouncing point. And then when you get that, then there's an extension that you do, and there is the extension, and you can see the extension was almost reached. So some people like using Fibonacci as a target for some of their trades, and this could have been a confirmation of that 220 type of target. Anyway, I just threw that in. I don't trade Fibonacci that much, and you can see Fibonacci happening quite a lot. Extension, retractment, and there we are. That's most probably a perfect Fibonacci ratio right there. So I hope this gives you a view of that particular transaction, and why a buy was so much on the cards for that particular trade. There was just so much evidence pointing towards a buy. It could have sold, but now the one thing you must remember, that when you're trading, you will never get 100% certainty. You will, and what I do when I'm trading trades like this, I say there is a 70% chance of buying and there's a 30% chance of selling. You know, you've always got to balance the odds and trade that way. So that's why also straddle approach might have worked quite here. So you could have put a buy there and a sell over here, and it would have taken one of them, and you would have most probably been quite in a good position. So straddle is always one of the, if you're really uncertain. But certainly this was like an interesting example, and taught us quite a lot. The other thing I want to just show you here, here's another head and shoulders. Can you see this? This is the shoulder, this is the head, and there is the shoulder. Now, if that is true, then this will come back and retest the neckline, that the breakout, and it will go up a long way, the height of the head. So just another thought for you. There's a lot of things I can see in this particular price action, but that's another thing that you can look at. Okay, I've cleared the chart now, and the reason for that is I've noticed quite a bit of Fibonacci going on here. So I'm just going to put in the Fibonacci tool here, and you see there's the first extension, there's the retracement, and there's the target. So there's the extension, there's the retracement at the 61, or actually at the 38, and then it went to the target for Fibonacci. And so let's go for the next wave, and the next wave, pretty similar thing. There's the extension, there's the retracement back on the 38 or the 61, depending on how you, and it didn't quite get there, but it got quite close. So pretty close to the target. So that's another very close Fibonacci extension. And then if we look at the next one going down, there's the extension, there's the retracement. Again, it bounced on the 50, and there it easily hit the target over there. So Fibonacci is quite good for finding targets in this kind of environment. And as I showed you earlier, this was also a potential one where there was the Fibonacci movement, and then the retracement, and then look how it came pretty close to the 61.8. So 4 examples of Fibonacci in here. As I say, I don't actually use Fibonacci much, but I do use it as confirmations of support and resistance lines and non-horizontal support and resistance lines. If there's a confluence between a Fibonacci line and those lines, it does add value to the trading. Okay, so let's move on to today's setup. And here is today's setup. This is the daily chart. This is the 4-hour chart, and this is the 1-hour chart. Very similar to the previous setups. And here is the multiple moving average chart. It's most probably separated by moving averages of 4. So you start with 4, 8, 12, and so on, and that gives you them. And the idea of that one is when there's knots like this, there will be a good breakout. There's a knot, and there was a good breakout. There's a knot, smaller breakout. Not reasonable breakout. There's another knot. So what we're saying, has this breakout run its course, or is it going to run a long way further? So that's the idea behind the multiple moving average. And what it's saying, this one has lots of potential because it's knotting like crazy. Then if we look at the daily charts, we've got a sort of a semi-channel here. You've got a bounce point there, bounce point there, bounce point there, and maybe it's just going down to the bottom of the channel and might bounce up from there. But there's an indication of what's going on. It has, however, broken through quite an important support and resistance line. You can see the candle's gone through that support and resistance line, and that's an indication that also that there could be a big move happening. You can see the same support and resistance line down here on the 4-hour. It's broken through, and that could be an indication that some big forces have forced their way through support. But then if you look at the daily, where's it going to go? Is it going to go to that level? Is it going to go to that level? Or is it going to go to that level, or even that level? And the same thing here, you need to decide if you're going to sell, where are you going to put your target? If you're going to buy, because there is a buy opportunity possibly on the daily, then where are you going to put your targets? And again, there's some strong resistance areas above that you can use as your targets. Like here's a resistance area above that you can use, or even that particular area. You can see it took quite a move to get through that support and resistance area. So again, your thoughts should be, where should I enter? How should I enter? Should I use a straddle? Should I use a penning order? Should I use a market order? Is it too late? Have I missed the trade because it's already broken through? Now here's the daily, the hourly chart. Here's the hourly chart where my cursor is, and you can see it's already broken through a support level, non-horizontal support, and it's already going. And a lot of people say, oh no, I've missed it, it's too late, it's already run a good 50 pips, and there it's completely oversold. It's completely oversold on the 4-hour. It's quite oversold on the daily. Is it going to move any further? What should I do? What are the options? And that's what I'm asking you. What do you think? What would you do in these circumstances? Would you not trade? Would you trade? How would you trade? Where would you put your targets and your stops? Would you use trailing stops and all that type of thing? Would you top up if the trade goes successfully, or would you scale out? Would you cash in systematically as the trade goes more successful so that you start trading on a totally risk-free basis? That's what I really need to know from you guys. And then what we'll do is we'll discuss it next week again in a similar way. So please consider these options there. Consider those options over there. And then let's get together next week and discuss the result of that trade and see which trading signals you might have missed and which trading signals you might have seen, and whether your targets were correct, whether your stops were correct, whether your following stops would have kept you in the deal throughout time, and how many pips could you have made if you had all of those things right. Make a decision on what you're going to do, or even if you just want to say, look, I'll consider this and I'll consider that, but let's get a bit of discussion going on YouTube. And the previous one only had 13 people. Out of 1,000 views, only 13 people were brave enough to venture an answer. So we're all in this Forex trading to learn more about Forex trading. So there's nothing wrong with getting things wrong. You learn from your mistakes and you learn from your successes. Also, please use those resources that I mentioned earlier. If you do need some assistance in certain trading areas, I think you'll find them quite useful. So from me, Alex Deploy, cheerio, and I'll present the solution to this particular trade next week.